This is trading with Livevol. Today, because I'm gonna have some guests, and I wasn't sure if I can actually fit into videos on time. I'm gonna actually do my trading with Livevol and the earnings report all together at once for you guys. That way, you guys can get that information for sure. So let's actually go right to it. This is my account. This isn't actually. This is like it's incorrect. So basically, it's more smooth. So this is probably what it is. I knew I'm leaning long on a lot of the stocks, so I knew eventually like this couldn't last forever for now. But I'm a little bit down today, and that's what it is. Let's actually go to the trades. So I did 2 earnings trades yesterday. One was in Hawaiian Holdings. I thought the airlines, as you guys know, I was kind of bullish on it. I was trying to do this 3-way trade, and then it ended up being same as selling this put. So I did that. I want to buy this back for like a dime. So let's see, working. Yeah. So I think I have it working for a dime. I probably won't get it filled today, but maybe tomorrow, and then I'll see how it goes. Right. So that's in Hawaiian Holdings. So it worked out really well. I sold 5 lots for 85 cents. Looks like if I do get it closed for a dime, I'm gonna make what, $3.75 on it. Now on IGT, I also did a spread because everyone was buying these calls. Looks like they were buying the calls and selling stock, which in hindsight makes sense. Plus, like, I never really made any money in IGT in the past, so I guess this is like apropos for, you know, my past with IGT. But I bought the 14-15 call spread 4 times, paid 35 cents. So basically, that's 140 bucks. That's pretty much gonna be gone. Maybe I can salvage something if I can sell something, but for now, it doesn't look like that's gonna be anything. Newmont. And I'll just run through these pretty quickly. Basically, I bought this spread for, I think, like 30 cents. Let me actually look at it. Yeah, I bought it for 30 cents twice. Looks like I'm down a little bit on this. What else is it? CBS. I bought this spread 10 times, and basically I was risking a quarter to make a quarter, right? So 250 to make 250. Looks like it's had a pretty, you know, I mean, it's down 1%. It's not really anything. So this since it's May 2nd, I just got a while to go. And if you look at the chart here, it's really like nothing, right? So basically, like in the end, like I need this to go to right here, where this little finger is, for me to make money. So there or higher, I make money. There, you know, this is my break even, and there and lower, I lose money. So if CBS goes here and then goes back down, that's not good. But if it, you know, runs back up, it should be okay. May 5th is the earnings announcement, so it's actually, these options are going to expire before then. The other one was Philip Morris. If I actually typed it in. On these puts, I was thinking of selling another put, but basically the issue is they're going to have earnings here tomorrow before market. So I bought this piggybacking this other put that these guys were buying, right, on this date. So I basically bought it with them. I'll see what happens. I bought 5 of them in the end. You know, I have until May 9th. But we'll see what the earnings are. I think, yeah, so we'll see after today. The other one is in Apple. So Apple has earnings today too, and I'll cover the earnings stuff right after I do all this. But I've had this call spread for a while. I'm basically, you know, I'm basically committed to this trade now. So we'll see what happens. I don't think people are expecting much. So in the end, we'll see what happens, but this is kind of what I was doing before. So this is my personal opinion, kind of dictating the trading. So not so much the software, even though originally when I put it on, the one that already expired, the 510, 530, that one I put on because of information I got from the software. So let's actually, now that we're at Apple, let's actually jump into the earnings, right? So if you, Apple has earnings today after close, right? So I don't think people are really expecting much. I'm like listening to CNBC and reading some articles, and basically this is kind of like a non-quarter. In fact, the options, the IV30 is implying, if you look at the stats, it's at 26th percentile. So they're expecting a 3.4% move in Apple. That's what the options are implying. I guess in the last 12 quarters, it moved about 4.9%. Last 4 quarters, it moved about 4%. As you guys know, if you guys been seeing the video blog, these call put ratio and all this stuff, it's pretty much the norm. So, you know, in the end, I think the biggest mover, I feel like, could be not so much the numbers, but what they say in terms of the future, right? So if they like paint a very rosy future, that sounds good. If it's something like very negative, so let's say they, you know, they don't really think there is going to be too much opportunity going forward on all their new products that might be coming up later this year, then it might sell off. But in any case, one of the things about Apple is it's been kind of wedging since kind of like December of last year, and it's getting tighter and tighter. So, you know, if you follow this chart, it's getting tighter and tighter. Eventually, it'll break out somewhere. We don't know where. My guess is up to the upside, but you know, who knows? So, you know, basically, we'll see how it happens. It was interesting. I was watching CNBC, and they were interviewing Carl Icahn, and they asked him about Apple. And I don't know, maybe it's a weird feeling, but he didn't seem to be as aggressively positive for Apple as he was before. He did mention it was really undervalued, and that they were spending billions trying to come up with new products and services on the R&D side. And he actually used the word hope to that it'll work out for him. So in the end, I'm not 100% sure if he believes they're on the right track. In fact, looking at that interview, it actually seemed like he didn't believe that they were on the right track, but he is kind of going with them for now, I guess because Apple has enough clout to fend off Carl Icahn. But I'm thinking if they keep continuously performing poorly, that might change going forward. So that's Apple basically. So what I'm saying is the options are implying a 3.4% move, and in the last 12 earnings it moved 4.9%. Last 4 earnings it moved 4%. The other one is Facebook. So I want to talk about Facebook a little bit. So Facebook, I already put on some trade, right? So I was looking at these trades, and yeah, so I see these now. Looks like somebody's buying the May 65.70 call spread, maybe with stock or something here. But this is when I was looking at this morning, it looks like there were more calls being traded, but a lot of them were just sells. And the implied volatility is 60. It's only at the 61 percentile, right? So if I look at the yearly chart, basically the IV went to 78 here before earnings, 63, and right now it's at 59. I think before that it was 45. So, you know, it's kind of like, it's a norm. It's expecting 8.8% move. The last 4 earnings, it moved an average of 12.9%. So, you know, the option guys, order flow at least is indicating it's going to move less than 10%. So, I was looking at these options, and they did look pretty expensive. So I was, and only expensive because of the context of what's happening, right? So if you look at the way I was thinking was I was going to sell the 62.5, 65 strangle for around 650. So let me see if I can actually show you guys. Right. So you see how this is around, this is 660, but roughly like 650, right? Is what I was thinking. I actually didn't remember that I was already short 2. So I was only going to do it 3 times, but accidentally I did 5 puts, and I'm still need to do 2 more calls. So I'm going to do this thing 5 times for 650. So why did I do it? The reason I did it was, let me actually type it in. So my thinking was that, you know, the upside, if they announce something great, might be $75, and the downside was 50. So that was kind of like my range of what I thought the best or worst case scenario might be. I could be completely wrong, but that's my premise, right? So I'm thinking it's going to trade between 50 and 75 is my premise. And I am selling the 62.65 strangle for 650. So basically my break-even point is 71.50, right? And $55. $56. So 56 and well, let's say 65, right? So 65, yeah, 71.50 or $56, right? So 56, 71.50 is my range to kind of break even on this. So as you can see, I was kind of tilting it more that they'll probably get a slight bump, right? Whether that's correct or not, you know, that's just my personal thing. If you guys think like it's not going to happen, but you still think the option's overvalued, you can actually sell the 62 straddle. You can actually do the 65-60 strangle. That's like your own, you know, personal way of trading. I just thought that that was my upside and downside, right? So if it goes to 75 bucks, let's say I'm wrong on the upside and my break even is 71.50, I was thinking I was going to lose 350. And then if I'm wrong to the downside and it goes to 50, I was going to lose $6, right? So that's my premise. And if I'm correct and it just hangs around here, so I was thinking like it's going to move up to like 65. So 63, 64, 65 is what I'm actually thinking. So what that means is I'm basically thinking this stock is not really going to move too much, right? And the reason I did that was because some guy did this spread where he bought the SEP 65 and sold the May 65s a bunch of times. So that coupled with what I was thinking might happen with Facebook is why I did this trade. Now, I need to sell 2 more calls to really make it into a real strangle. And, you know, I think maybe if there were other people maybe that I talked to before I did this trade, maybe they might say, hey, why don't you be safer and sell the 60 strangle? So then my break even would be like 55, 70, right? 55, 70. But in the end, you know, it's in there. So, you know, I can make 650 if it stays between 62.5 and 65, and I can probably lose between 350 and 6 if it goes to like 75 or $50. But we'll see what happens. But this is my pretty much my bet for the earnings, because I was looking at a bunch of other earnings and there wasn't really too much. So Cheesecake Factory earnings, I looked at the stats, 58th percentile. The order flow is, mostly like it's been call spreads. So for those of you guys who actually trade this, maybe you can do like a small call spread, but in the end, like nothing big on Cheesecake. And then the list of stocks is gigantic. So so let's go to Qualcomm. I know a lot of you guys trade Qualcomm. Look at the stats, and basically 44th percentile. Nothing big. They do the spread, this risk reversal, but nothing so big that actually screams out one way or another. Basically, in Qualcomm, I think it's saying it's going to have a 3.3% move, and basically historically it's moved around 4% in the last 12 earnings. So nothing much on Qualcomm. Let's see, what else do we have? We have Caterpillar coming up. I kind of like the industrial, like I kind of like Caterpillar, but it looks like it's kind of like, you see how it's like been very tight, and maybe it's trying to break out maybe, but in the end none of these orders and none of these options are even remotely leaning one way or another, right? So it's all like almost all these earnings are kind of muted, and what I mean by that is like it's almost like the options aren't really expecting a big move, right? Even in CELG, right? So in CELG, maybe with all the other biotechs already kind of forecasting, it's saying it's going to be a 2% move, and that's pretty much what it's moved in the last 12 earnings. So I think they kind of have a generally good idea what CELG is going to report, probably because of maybe some of the other reports that came out with Gilead, and I think Amgen came out and stuff like that. So basically nothing there. I look at Dunkin' Donuts. Look at the stats. There's some call activities, but I don't really have any strong opinion on Dunkin' Donuts, and none of the order flow or the volatility kind of screaming at me to trade it, right? So like if there were like, I don't know, like 100% vol or like something big was trading, but we're talking like, even though it's like 4-to-1 calls to puts, we're talking 2,500 calls. That's not that much, right? Especially when the average daily volume is 1,500. So basically, it didn't even reach 2 times the normal volume and has earnings coming up. So it's not a big deal. GM earnings, same thing. Look how low the percentile is. It's almost like it's a non-event almost, just because they have more important stuff to deal with right now, with the recall issue and then possibly getting sued and stuff like that. So I know myself, I like GM in terms of maybe like some of the valuation, and I think if they and they will, but once they get out of this litigation stuff, it'll probably have a pretty good jump. So I know a lot of funds and money managers are in GM, and they're probably frustrated because it's going to be stuck here for a while. So that's GM. JetBlue. So as you guys know, I'm kind of bullish on the airliners, but you see how on April 16th, right here, and I click on this bar and you can see the option chain. You see this guy did the spread, right, for a dime, and I was trying to piggyback it, but I didn't get filled. It's one of the reasons why I was comfortable selling the Hawaiian Holdings, and I kind of felt like Delta was going to have a good earnings just from kind of like reading about it. And to me, like if you look at JetBlue, now the 8.9, maybe you can buy it for a nickel or something, and if anything, I might work that, right? So I'll do complex, sell this, buy this. I'll do it. I'll do it 10 times for a nickel. Send order. Boom. Most likely, I'm not going to get filled. So, in the end, probably nothing's going to happen with the JetBlue. But I feel like I can put it in until like maybe like an hour before close. I'll take another look and see how it is. So Laureate, they're a tobacco company. Basically, they could possibly merge with RAI. If they do, I think the stock has a lot of upside. So I think this is like a merger candidate to me. So it could actually, like, one day it can be up like $10 or something. But for now, in terms of earnings, there's nothing out here, right? So you can see it's pretty flat. I did see kind of like little more put buying, not so much in this one, but in Philip Morris. So Laureate kind of does that smokeless cigarettes, the one with like the blue light or something. So it seems like it's gaining popularity. I talked about it, how I saw like on Netflix House of Cards, and then I see like people walking around smoking that thing. So maybe that is one of the opportunities, but I don't really smoke, so I don't really know if that's actually comparable to real smoking or what, but that's that. So the only one I have on the tobacco that's kind of related to Laureate is Altria. So basically I have these puts, the 37.5 puts, and I have about 150 bucks on it. So because somebody bought 9,000 of them, but in the end, like, we'll see what happens. If it goes down a little bit, down to here is what is the put that I bought. So it's not that much, right? So that's why I bought it, because it was there like a few days ago. So it can kind of revert back a little bit. I'll just get out. So that's about it on the earnings side. Usually I look at these, as you guys know, I look at these watch list trades, and I went through them today, and there wasn't pretty much anything to that kind of like spoke to me. So I see this just now, BX, 31.5 calls, Blackstone. So this is exactly how I do it, except I have 4 screens and not one. So it's like this one I have to keep closing, right? So I look at it. Okay, this is kind of, it's a non-event, but it's interesting. So you see how all these calls traded, just jacking up the volume, basically because Blackstone has a dividend tomorrow. So what people do, a lot of professionals, they'll trade these calls back and forth, and they'll maybe somebody will forget to exercise, because these are all exercisable options. Because you should collect 35 cents, right? And the way you figure out whether you should exercise your calls or not before earnings is if you look at the put, and this is a very rough way, but if you look at the put, and if the put value is less than the dividend, right, then you should exercise. Why should you exercise? Well, because you can do this. So let's say like you have these calls, right, the April 31 calls. If you exercise, now you basically are exercising the right to buy stock for $31. So you will own stock for 31, right? So if you wanted to have the same P&L, let's say structure as you had when you had the calls, because you might say like, so I collect 35 cents. But then what happens if the stock goes down? I have unlimited downside down to $0. What you can do is you exercise the calls, you turn it into stock, and then you go in and buy these puts for 4 cents, right? So what you essentially did was you now have the same exact risk chart as owning these calls, but now you own stock and puts. So as you know, I talked about a few times before, if you own stock and puts, it's same as owning a call. Let me repeat that. If you own puts and stock, it's same as owning a call. So if you exercise these calls and you still would like to keep the same exact P&L profile, risk profile in terms of chart, and you don't want to lose if it falls below $31, you basically buy these for 4 cents, right? So do you see how that makes sense? You collect 35, and now you only have to pay 4 cents to hedge it, right? And turn it back into a call. So if you can actually look up to this, up to 32 is when you can do it, because you can pay 20 cents, and then you can basically collect 35, right? Seems like pretty straightforward and easy. One little caveat to this whole thing is you actually will have to buy this before you exercise, right? Because if you do not buy this today and you're saying, hey, I'll exercise and buy it tomorrow, well, you have overnight risk. So you need to buy the puts today before you exercise the calls. So that's why people are crossing these. That's a quick lesson on options. It's something that a lot of the professionals do, and I think they're hedge funds who just do this kind of play only, and that's their actually entire business. And I think they make a lot of money. So doing it. So that's kind of that. So I was looking at some other trades that I can talk to you guys about. There wasn't really that much, which is maybe like the whole market's taking a pause. I don't know, but essentially, you know, no one's really putting on any bet. I see this spread, right? So somebody's buying the 84.77.5 put and SPY. Let's take a look. Yeah, so maybe they're thinking like, hey, it's kind of toppy and we're gonna go down. But yeah, that's I was going through it. There wasn't too much. For now, the thing I was working on though, this is pretty. So as you guys know, I was buying some VIX calls, but I think maybe I was interested in maybe selling VIX puts every month, trying to get a little more premium, right? And my whole premise behind that is I don't think the VIX is going to, you know, be at a low state. It's going to be around here or higher going forward. So, you know, maybe I should just sell some puts on the VIX, and overall that could be a good strategy for me. Also, as you guys know, I'm selling like the EM strangles. So, you know, I sold the 4.5s 2 weeks ago. They look like they're finally in the money, and then I have these working. What am I trying to sell this for? Yeah, so that's my offer right there, 22 cents. So we'll see what happens. I have a 1 lot in there. So I'm gonna just keep selling the calls, and then maybe as EM goes down, I will buy the puts. But if you look at the order flow in EM, you know, you've been seeing some put trading, some buying, some selling, but overall it looks like more buying than selling. So other than that, I hope you guys enjoyed the show. I'm going to try to break it down more into segments so you guys can actually talk about it. One thing I am considering doing is, if you go to Livevol community, you can actually go to the chat tab right here, and while you guys are listening to my video blog, maybe you guys can ask me some questions. So I have another screen where I have this chat up. So, but you guys have to sign up as a member of Livevol community. And then while I'm doing the video blogs, if there was like a stock that you wanted to talk about, you can kind of type it in there, and I'll see it, and then I'll I'll kind of comment on it, or we can talk back and forth, right? So I was thinking this is a good way for people watching the video to not kind of comment on it, and it'll be pretty exciting. For those of you who want to get a trial of livevol.com, go to livevol.com, www.livevol.com, go to LiveVolX, read the little Barron's article, it's pretty cool. And then you can click here to sign up, or you can open up an account at the securities, and it's a pretty awesome tool. So hope your trading goes well. I'm hoping my strangle and Facebook works out, but I'll find out tomorrow. Cross my fingers, and then well, we'll talk to you guys tomorrow. Oh, by the way, next week I'm gonna be at the OIC conference. This is an industry-wide conference, options industry. It's held every year at like end of April, early May. I'm gonna be in Austin. I'm gonna try to figure out how I can broadcast from there, but if not, I'll see if somebody else can kind of take over for a few days. But hope your trading goes well. Talk to you guys tomorrow.